Disclaimer: this video contains a mix of verified historical facts, expert financial opinions, and geopolitical theories. The theories presented regarding secret monetary agreements and future gold repricing are speculative analysis based on current data trends, not proven facts. This video is for educational and entertainment purposes only and does not constitute financial, legal, or investment advice. Always conduct your own research or consult a licensed financial advisor before making investment decisions. In May 2026, the President of the United States flew to Beijing, bringing with him 18 of America's most powerful CEOs. The public was told this was about a $17 billion agricultural deal and selling Boeing airplanes, and according to the White House, that is a verified fact. But beneath the surface, financial analysts and geopolitical theorists are pointing to a much darker, much older game being played. It's a game that dates back 2,400 years to ancient Greece. Today on Digital Atlas, we are breaking down the verified history of global wealth transfers, the expert forecasts for the global economy, and a massive new geopolitical theory about why gold might be the ultimate endgame. During the summit, Chinese President Xi Jinping invoked a concept known as the Thucydides Trap. This is a documented historical concept. It is named after the ancient Greek historian Thucydides, who chronicled the Peloponnesian War between Athens and Sparta. The theory states that when a rising power, like Athens or today China, threatens to displace an established ruling power, like Sparta or today the United States, the result is almost always war. According to research by Harvard University's Belfer Center, out of 16 times this has happened in the last 500 years, 12 have ended in bloodshed. Xi Jinping has publicly stated he wants to avoid this trap. But how? According to a popular geopolitical theory recently broken down by financial analyst Andrei Geek, avoiding war requires a new global monetary order, one that involves the Strait of Hormuz, the ghost of the 1985 Plaza Accord, and a massive repricing of gold. Let's look at the history that makes this theory so compelling. First, we have to look at the Plaza Accord of 1985. This is a verified historical event. The United States was running a massive trade deficit with Japan. To fix it, the US, UK, France, West Germany, and Japan signed an agreement to manipulate currency markets and weaken the US dollar against the Japanese yen. It worked for America, but it devastated Japan's export economy. To save themselves, Japan printed cheap money, creating a massive asset bubble. When it popped, Japan entered its lost decades, a period of economic stagnation that the country is still recovering from today. Many economists believe China is terrified of repeating Japan's mistake and will fiercely resist any US pressure to rapidly revalue the Chinese yuan. So, if they cannot devalue the currency, what asset could they use to balance the global books? Theorists point to the oldest money in the world, gold. There is a macroeconomic theory that states the country exporting gold is usually losing and the country importing gold is usually winning. To see this in action, we look at one of the most dramatic and secretive wealth transfers in human history, Operation Fish. In 1940, as the Nazis swept across Europe, Winston Churchill ordered the secret evacuation of Britain's entire wealth, over 1/500 tons of gold, across the U-boat-infested Atlantic Ocean to Canada. This gold was used to buy planes, tanks, and ammunition from North America to fight the war. By the end of World War II, the British Empire was in decline, and its gold had flowed to North America. The United States ended up holding over half the world's gold, cementing the US dollar as the global reserve currency. Today, data shows that physical gold is leaving the West and flowing into China at record rates. This brings us to the core of the theory regarding the Trump and Xi summit. The public verified deal is that China will invest heavily in the US and buy agricultural products, while the US rolls back certain tariffs. But the theory suggests a hidden deal, a coordinated repricing of gold. Here is a verified fact. the US government holds over 8,000 tons of gold. By law, it is currently valued on the Treasury's books at a statutory price of just $42.22 an ounce, a price that was set back in 1973. The theory argues that if the US and China agree to mark gold to its current market price, or push it even higher, the US balance sheet instantly improves, making its massive national debt look manageable. For China, a massive repricing of gold causes their newly accumulated reserves to explode in value. While this specific deal is unproven theory, the bullish outlook on gold is a verified expert opinion. JP Morgan is forecasting gold to hit $5,055 by the end of 2026, and Wells Fargo is predicting gold could reach $6,300 an ounce. Whether the secret gold deal is real or not, the economic consequences of the current geopolitical climate are already being felt. Many economists warn we are entering a severe K-shaped economy. Think of the letter K. The top arm points upward, the bottom arm points downward. They are moving in opposite directions at the same time. The top half, the winners, are people who own scarce assets like stocks, real estate, gold, and Bitcoin. As currency devalues due to inflation, the nominal price of these assets skyrockets. The bottom half, the losers, are people relying on wages or holding cash savings. Their purchasing power is destroyed as rent and groceries become unaffordable. Some theorists argue that to manage the social unrest caused by this inequality, governments will eventually implement a digital control grid using central bank digital currencies. While these digital currencies are currently being researched by many governments around the world, their use as a control mechanism remains a speculative theory. So, how do financial experts suggest you navigate this? And remember, this is educational, not financial advice. For US and UK investors, if governments continue to tolerate inflation to manage debt, your purchasing power will drop. Experts like Ray Dalio suggest holding assets that governments cannot print, recommending a 5 to 15% allocation to gold in a diversified portfolio. For Chinese investors, with the domestic real estate market facing challenges, many Chinese retail investors are following the People's Bank of China's lead by purchasing physical gold as a hedge against volatility. The 2026 US-China summit was about much more than trade. It was about navigating the Thucydides Trap. From the verified history of Operation Fish to the Plaza Accord of 1985, we know that global wealth constantly shifts. Whether the gold repricing theory proves true or not, gold is proving once again why it has been a trusted store of value for 5,000 years. What do you think? Is the secret gold deal real? Will gold hit $6,000 this year? Let me know in the comments below. I reply to as many as I can. If you found this breakdown valuable, hit that like button, subscribe to Digital Atlas, and share this video with anyone who needs to understand what is really happening in the global economy. Until next time, keep exploring.